Hey everyone, welcome back to our channel, where we break down the latest stock market trends and financial news in a simple and engaging way. If you're an investor, trader, or just someone who wants to stay updated on the stock market, make sure to hit that subscribe button and turn on notifications so you never miss an update. Today, we're diving deep into Super Microcomputer, ticker symbol SMCI, a stock that has been making waves in the market recently. It's currently trading 2% higher, and many investors are wondering what's next for SMCI. Stay tuned as we analyze its latest price movements, analyst ratings, financial performance, and what this means for investors like you. Let's get started. First things first, let's talk about Super Microcomputer's recent stock performance. On Friday, SMCI stock price went up by 2% during midday trading, reaching a high of $60.43 before settling at $60.49. This increase owes a previous close of $59.27. But here's the interesting part: the trading volume was around 44 million shares, which is a 37% decline from its average daily volume of nearly 70 million shares. So, despite the lower volume, we still saw an upward trend. But what does this mean for investors? Well, when a stock moves up with lower than average volume, it might indicate that fewer sellers are willing to part with their shares, creating a supply shortage that drives prices up. However, it could also mean that fewer investors are actively trading the stock at the moment, which may lead to short-term price fluctuations. Now, let's discuss what the experts are saying about SMCI. Over the past few months, several analysts have weighed in on the stock, issuing their ratings and price targets. Loop Capital reiterated a buy rating, meaning they still believe the stock has potential for growth. tsla recently upgraded SMCI from a hold to a buy rating and set a price target of $48. On the other hand, JP Morgan Chase & Company raised their price objective from $23 to $35, but gave the stock an underweight rating, signaling caution. Meanwhile, Wedbush maintained a hold rating, and Northland Capital went a step further, giving it a strong buy rating. So, what's the takeaway here? Well, the stock has mixed ratings, with some analysts confident in its potential, while others remain cautious. Out of the 19 analysts who have weighed in, 3 issued a sell rating, 10 suggested holding, 5 recommended buying, and 1 analyst gave it a strong buy. The consensus target price stands at $60.20, which is right around its current price. This means that, at least for now, analysts believe the stock is fairly valued. Now let's shift gears and take a closer look at Super Microcomputer's financial health. The company has a market capitalization of $32.83 billion, making it a major player in the industry. It currently holds a price-to-earnings PE ratio of 28.15, which suggests that investors are paying about 28 times the company's earnings for each share. The beta for this stock is 1.30, meaning it's slightly more volatile than the overall market. If the market moves, SMCI tends to move even more in the same direction. Now, let's talk about liquidity. The company has a quick ratio of 1.93 and a current ratio of 3.77, meaning it has more than enough short-term assets to cover its short-term liabilities. Plus, with a debt-to-equity ratio of just 0.32, the company has relatively low debt, which is a great sign for long-term stability. One of the best ways to gauge a stock's potential is by looking at institutional investor activity. When large funds and investment firms buy shares, it often signals confidence in the company's future. So, what's happening with SMCI? Several large investors have recently modified their holdings. Creative Planning, for example, increased its holdings in Super Microcomputer by 9.1% in the third quarter. SignatureFT LLC raised its stake by 47.4%. Cromwell Holdings LLC increased its position by a whopping 1,511%, and Louisiana State Employees Retirement System raised its stake by 160.7%. In total, institutional investors and hedge funds own about 84.06% of SMCI stock. This is a strong indication that the smart money sees potential in the company. So, the big question: what's next for SMCI? Should you buy, hold, or sell? Here's what we think. Given the stock's recent price movements, analysts' mixed ratings, and strong institutional investor interest, it seems like SMCI is at a crossroads. While some analysts are skeptical, others believe the company has strong growth potential. If you're a long-term investor, this might be a stock worth watching, especially considering its solid fundamentals and low debt levels. On the other hand, short-term traders should keep an eye on market trends, as the stock's high beta means it could see significant swings. Whether you decide to invest or not, always do your own research and consult with a financial advisor before making any major investment decisions. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.